There we go. Sorry about the sound. Okay, morning everyone. Let's get going here. All right. U.S. markets last night, citing session overnight. You can see there really kind of had a huge head fake going into the afternoon. You really had markets that kind of drifted higher for the first maybe one third to a half of the session. And then you can see there we really just got into a downtrend into the last part of yesterday's session. It was only around 315, 320 that all the indexes in the States made a total U-turn. And you can see there in the NASDAQ and the S&P. It was actually a violent rip higher. We went negative on the NASDAQ. And turned out to gain 23 points on the day. The S&P went down and tested flatline and finished up close to 1%. So we had a huge rally there at the very end of the day, and I think that that's important. We always talk about the last hour or last half an hour of the day's trade action is kind of what's most important. If you can see there on the performance across the board, pretty much every sector is up outside of some of the conglomerates. But bottom line is we really had a huge rally into the death, and I think we're going to have to take note of as of this morning. We did have Citigroup that had better than expected earnings earlier in the day, and really a retail sales number that was much stronger than expectations. That puts us to, I think, three really important data points in a row out of the U.S. that have been significantly better, all starting with the jobless claim, the non-farm payrolls number. This sell-off in the U.S. equities market was really led by the better than expected non-farm payroll number. So, I think we're going to have to monitor this one really closely. We're going to have to see how this is going to impact us going forward, as we can really see that the U.S. Economy is starting to get some traction. One of the side effects to that as of this morning is we see, the commodity space, or I'll say commodities, the precious metal space under a bit of pressure with gold, platinum, and silver all down really across the board. At some point we're going to see, markets probably start to force the hand of the Fed if those numbers continue to come through, as well as the last few pieces of data have been. All right. Moving on. Just want to show an interesting chart we picked up on overnight. China exports growth versus GDP, and this is a research that was put out by Fasur, and basically showing the dip that we've seen, this huge dip in Chinese export growth into negative territory, and how reminiscent it was of the 2009 move that we saw into the negative handle, and the effect that it had on GDP. You can see there, and you can also see the correlation in terms of Chinese GDP down here on the bottom. I think without question that we probably going to end up seeing a softer Chinese GDP report than what expectations are at the moment, and that's probably going to continue to weigh on markets, and we'll continue to monitor that and see how it plays out in the equity markets. But just something interesting to look at. Another little interesting chart that we're going to look at here. This is really the chart showing you multiple asset classes there. We've got equities, we've got corporate credit, we've got sovereign debt, we've got FX, and we've got commodities. And what's so interesting, and you don't see this all that often, is the disparity between the different regions globally here. And if you see here, I know this is a little bit difficult to see because it's small on the chart, but basically what we're doing is we're starting with emerging markets out here on the left, and we're moving more into developed markets over here on the right. And it just works out that way in terms of performance. This is Japan on the very right, and I believe we've got Greece and India and some of these outperformers over here on the left. So what's been interesting is we've seen this shift. Last year we saw this huge push into the developed markets and less risk into emerging markets, and you're seeing that it's starting to unwind as of right now, with the developed markets really starting to underperform and the emerging markets starting to outperform. And you see the same sort of thing there in FX out on the right in the red, where you're seeing we're seeing the underperformance in the EM currencies relative to the developed world. So it's just something really interesting to look at. And you see here, we've had precious metals that have really outperformed over base metals. So we've got a huge disparity in a lot of these asset classes at the moment. And I think, in my mind, the most important part about that is that we're really going to see some real volatility when you see things start to really to lose correlation in the same asset classes to that extent. It's going to create real volatility, and that's I think exciting for guys playing the market like us. All right. In the Asian session overnight, we saw Hang Seng in China take some some pretty heavy sell-offs there late in the session. Really, both trading down over 1%. Something interesting happened there overnight. Last night in China, we had basically a second failed bond auction out of the Chinese government. I think they were trying to sell about 28 billion yuan in government debt, and they only got about 22 off, and they paid quite a significantly higher interest rate. So that's important. You also had China's most important measure of credit, the one-year interest rate swap, which fell 19%, which is kind of doesn't really seem to line up a whole lot with the failed bond auction. But nonetheless, there's some real interesting events that are occurring over there, especially in the credit markets. And I still think that's probably the market's number one fear at the moment. So we're going to continue to monitor that, especially very, very closely. Right, moving on, let's look at some of the corporate action stuff today. We got a hell of a lot going on. We've got Pick n Pay, that full year numbers. Looks like headline earnings per share came in along with the recent guidance, more or less right in line. Revenue number also looking in line. Divi per share maybe a touch of a beat by a couple cents, but more or less looking very much in line with expectations. We've got SA Breweries that just came out with a trading statement a little while ago. I don't really have anything to compare it with, to this quickly, but they said fourth quarter U.S. domestic sales volume were down 3.4%. Full year U.S. domestic sales volume to retailers down 2.9%. Asia Pacific NPR numbers grew by 4% for the year. So we'll see how that one trades out today. I'm actually going to show you guys the chart of that in just a little bit, but I think that one could definitely be in play today. We've also got PSG, which is out a little bit later. In the States, we've got Johnson & Johnson, Coca-Cola, and Intel later tonight. And then we've got Goldfields, which has a business update call at 4 o'clock our time. All right, moving into the key factors on the day, we've got Chinese money supply numbers, which grew less than expected. I don't think that's obviously, I think, probably reflecting a little bit in the lower growth. We've got CPI numbers out the UK today. We've got the ZEW numbers in Germany. We've been talking, those have been moving markets a little bit more lately. We've got Empire Manufacturing, which is out today in the States. We've got CPI numbers in the States, and I actually think these CPI numbers in the States are bigger than they normally would be. The survey's for 1.4%. We're starting to see inflation starting to slowly pick up in the States, which obviously, if we start to get to the higher end of the band, you're going to have to see the Fed start to put the foot on the brakes there. And I have a sneaking suspicion that this CPI number in the States may be a little bit more important than a lot of people are thinking. So just keep an eye on the data coming out today around 2:30. We've also got the Lockhart from the Fed speaking at Georgia conference around then, and we've got Yellen who's going to address the financial markets conference 15 minutes later, and then we've got net long-term TIC flows as well. All right, let's get into the maps. This one's getting long today. All right, first thing that we wanted to have a look at this morning is some of the indexes here. I know we showed some indexes to start the day yesterday. We're going to again show the FTSE, which we showed yesterday. We talked about how big this level was, how badly it needed to really hold here. on support, and we really had the ultimate test yesterday. If I'm not mistaken, we were down 50 plus points on the FTSE future. You can see there we really bombed through support on an intraday basis. But zooming forward, let me just zoom forward to support there. You can see we totally reversed course through the day. We finished up close to the highs of the day and definitely held support. So I think that's incredibly significant, and it's very, very important that we were able to do that. The NASDAQ, as the other one I wanted to show, the NASDAQ really managed to hold this 4,000 level, and you can see there, I mean, you don't have to be a technical guru to have a look at this level. It's a perfect horizontal support here at 4,000. We've been building into this support level, and it's the third real test that we've had of 4,000 since we broke above it, and without question, this is the major line of support. If this drops, I would see a significant downside potential in the NASDAQ, and I think I think guys are really on the edge of their seats in a lot of these NASDAQ stocks anyway, so it could really create some real selling if you see 4,000 drop in the NASDAQ. I would kind of expect this to maybe be a place where we catch a little bit of a bounce off of, so watch this closely in the next couple of days. Next one I'm going to show is Billiton's. I'm going to actually show the London chart here. The reason I want to show that is just because you can see this thing just continues to tighten up and tighten up and tighten up. If you look out, I mean, we can go all the way back for a full year now, and we really have just been in more or less a little narrowing wedge consolidation pattern. But what's interesting about it, and we'll zoom back forward here again, so you can get a real look here, is once this thing starts once it changes directions, it really seems to trend for a hell of a long time, and when it makes these U-turns. So I think this is really important. Let's just watch how this continues to play out. But this really just kind of highlighted to me how this thing's been trending. Once it starts to move one direction, the trend just gets intact and tends to stay that way until it kind of gets into the overbought or oversold region, and then manages to turn around and keep the trend remain intact again for quite a long period of time. So watch Billiton's and see if we can continue some of that downside momentum over the next little while. It's also actually got a little bit of a head and shoulder pattern, but it's not very classic setting up. So all right. This is SA Breweries. SA Breweries, you can see here in rand terms, really kind of coming up here and potentially making a little bit of a double top. You can see on a intraday basis, it topped out right around the same level, 555, 556. On a closing basis, it closed at exactly the same level as previous closing high, or within 10 cents, I believe. And this is going to be important. I mean, if we're able to push through 550 and close above 550, there's a hell of a lot of potential upside here in breweries. It's run a long way. Just the other day, we were, I think, testing about 480 rand. So we've had a nice long run to the upside here. But we'll have to see if this thing can actually push through 550 before we'll know if it can actually break out. Obviously, today we had this trading update. So watch this one closely. Off of this level could be important. I think if the market takes the numbers well, we'll probably see this thing really continue to push higher and through that 550 level. All right, Sibanye. Sibanye really has been probably the only star performer gold miner in the entire world. And you can see here it's incredible. We traded down close to $6 about 9 months ago, and last night we traded up to 27 over 27 rand on a closing basis last night. Really just breaking up out of a continuation pattern here through 26. I think that if you map out the target here from the sort of bottom of this little pattern, I would say that it's going to take us to a target price of maybe just over 30 rand. I think you got to be careful on some of the golds at the moment, because I think that with the improving U.S. economic data, it's probably going to start to put some pressure on the gold price, which we're actually already seeing this morning down about 1%. So I wouldn't be surprised to see some of the gold miners start to pull back, but that one's just broken out technically. It's looking quite strong. The last one I'm going to show is BTI, also making a breakout. quite classic, right through 600. We had 3 or 4 sessions before yesterday testing at $600. Weren't able to drop it. This pattern's looking incredibly symmetrical and well defined. The target here really going from about 572 breaking out through 600, so our target's going to be $28 to the upside, which will take us to 628 target price in BTI. And that's it for today, guys. Thanks a lot.